from like no cut to now almost certain of rate cut. How has that affected the market? We'll take a look at that. What's going to lead or lag? So I've kind of talked about gold, its leadership role typically going into the end of the year, beginning of the next year. What's Mag 7 going to do? Biotech. Are we about to see biotech lag here? I mean, that's a very real possibility, isn't it? We'll talk about some trade and biotech that's happening right now that may be indicative. I got to find where I'm playing somewhere, and I gotta pause it. Anyway. Anyway, gold, Mag 7, biotech. Are we about to see there? FBTC. Are we seeing some movement in cryptocurrency, but Bitcoin specifically? Some trade there. So we're going to look at the console. We're going to look at prints that are going on in that space. And we'll look at kind of where volatility stands. We've been pushing towards that upper bound that suggests we're reaching a limitation to the upside. We'll see how close we are today. And we'll look at today's Ghost Prints console prints, GP console prints as well. All right. So let's get rolling here. So big shift in rate cut odds. Let's take a look at that. So where can you go? There is a Fed Watch tool. So if you look at it today, this is, I'll just drop this into the chat panel. So if you want to take a peek, you can get it. You can look at it for yourself. Yeah, I know we're getting an echo. I solved it. But anyway, so if you guys want to take a look at it, this is the rate cut odds for December. And the meeting is on December 10th. So we're basically 2 weeks away. And look at what's happened over the past week. I mean, this is a big time shift from essentially 30% rate cut odds. Basically, we're saying 70% probability of no cut because that is the current rate. Now we're at 82.9%. That is a big time shift in 1 week. I mean, it looked like we were angling, but then all of a sudden we get some PPI data. We got some stuff coming out. Jobs are they better than expected? I mean, none of the data really matters. It's from September. But all of a sudden we see a little bit of weakness in the market, and we're expecting that Jerome Powell is going to come to the rescue. We're expecting that, hey, the new guy that may be replacing Powell is going to be more accommodative, right? The market's getting excited about that. But realize something. When we talk about rate cut odds increasing, we're talking about the dollar doing what? Is the dollar going to go up or the dollar going to go down in response to a shift in rate cut odds? What do you think there? So if we're expecting the rate cut odds going from 30% probability to 82% in a week, is that going to place upward pressure on the dollar or downward pressure on the dollar? Carlos says down. Okay. And I'm with him on that. Yes, it's going to create dollar weakness. So if we're talking about dollar weakness, what would you expect to probably do okay if the dollar keeps going down and down and down? Well, that would be a case for gold, right? Gold is the anti-dollar. You'd expect it to go up. What about Bitcoin? Bitcoin, if the market holds up, if risk assets hold up, we'd probably expect Bitcoin to rise, right? If we're talking about a weak dollar, what also would you expect to rise? Risk assets. Could we see a reinvigoration of the AI trade? Maybe in a different way. We'll look at some of the AI plays today, but the idea is that at a minimum, gold and Bitcoin should be areas that may be supported if risk assets, Bitcoin may hold up. And if we're talking about generally speaking, if the dollar weakens, gold should rise. So I may not know much, but I know I love you. No, I'm sorry. I don't know much, but GLD has consistently outperformed the market late in the year for the last 14 years into January. It doesn't persist indefinitely, but by mid to late January, typically gold does well. And we've positioned ourselves since back here that gold should do that. We've talked about it the last week. We positioned in Ghost Prints and BTG. It's up to 444 right now. Those calls are up 48%. We shared them here for example too. I just need this to get right about there. And I'm going to take our 450 calls and we're going to roll them to $5. And we're not going to be risk out. but we bought them for 29 cents and I'm looking to roll them at 25 cents. So if I can buy them for 29, roll them for 25, from move it from 450 to 5, I'm in a good position. I'm mostly risk out. And if we can push through 5 towards 6, it's going to be a decent winner, right? And guess what? As we get towards 5 and a quarter, I'm going to move it from 5 to 550. As we get to 5 and a quarter, I'm going to move it from 550 to 6. We're going to keep rolling. And if we keep going, we'll keep going. We'll eventually roll out as we approach 30 days. But my intent with this is to say, look, I'm expecting to see gold rally into the end of the year. And this is exactly what we've seen in the options market as well, in terms of trade. And so we've been following this over the last couple weeks in the gold space and really kind of trying to lean into it just a little bit here as one area that I expect should outperform the market, or at least equal perform. We'll see today, 0.78%. That's gold. And we've got SPY at 0.89%. And the reality is, I mean, the SPY's coming off lows here. Okay. So as we look at gold, we're looking for a continuation, but the reality is we're trying to get in ahead of it. And that's exactly what we did in BTG this week. Get in ahead of it and let it roll. Now, what about Bitcoin though? Carlos says Bitcoin follows the markets. Yes, it does. Because why? At times, I mean, Bitcoin does have a pretty strong correlation to gold. Bitcoin really hasn't moved yet with the markets. But what creates the correlation of Bitcoin and the S&P 500? It's a risk on asset. But here's the deal though. What are the long-term returns of Bitcoin? So let's get past the idea of Bitcoin as investments. What are the long-term returns of Bitcoin? Real returns of Bitcoin. What do we think here? What are the long-term real returns of Bitcoin? It's a digital asset. What does this really do for you? Yes, the long-term return is 0. What about gold? What is the long-term return of gold? It's also 0. Bitcoin's actually easier to secure and store. You can keep it on a hard drive, right? It's actually probably a little bit easier and cheaper over time. But gold, because you've got to store it, you've got to protect it, yada, 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 you're going to have a negative real return over time. Because what is money? Money has no value, right? Gold has very, very little economic value except as a medium of exchange and store of value. And banks are buying it. They hold it because of that. It's rare. It's divisible, but not too rare. It's not platinum. Bitcoin is rare and it's divisible. There's a finite number of Bitcoin that will be made available, and we're almost reaching the maximum allocation as we speak. It's divisible. You can buy fractions of a Bitcoin. The point is, neither of these really have significant economic value. Bitcoin has none except as a medium of exchange and store value. Gold has little. Okay, yeah, you can coat something and increase its conductivity, but most all of the gold that's ever been mined is still in existence. So the fact that gold over here is basically equal performing with the S&P 500 tells you the S&P 500 is not going up in value. It's only going up because the dollar's going down. And so if I think about SPX, it is priced in US dollars. If the dollar goes down in value, all things being equal, the S&P goes higher. And so what I'm seeing here is that the S&P, virtually all of the strength we're seeing at the moment, really for the last 2 days, but mostly today, the S&P is not gaining any real value here. We're only seeing an adjustment because we're expecting the Fed to cut rates. But what makes Bitcoin be correlated with other risk on assets? It's because there is a significant paper market for Bitcoin. Most people that trade Bitcoin are leveraged. Bitcoin futures is a leveraged product. When we think about gold, gold also has a paper market. Forward/GC, gold futures contracts, guess what? They are levered, right? There is margin. But guess what? We got to see a little bit, get an inkling as to how much leverage is in gold recently. We delevered gold right here to some degree. And guess what? Gold went from 4,500 down to what? 4,000. It didn't go to 3,500. They raised margin in gold, right? We delevered the paper gold market and it pushed us to 4,000. We found support and now we're coming off it. Doesn't mean we can't make another leg lower if the dollar strengthens. But as of right now, we're going into a Fed announcement in 2 weeks, and this could push gold prices higher. And in the interim, we may see risk return. We may see leverage return back to Bitcoin. And it may start to correlate back with risk assets. Because frankly, the last couple of days here, let's look at high beta names, SPHB. High beta, we're seeing a rotation back here. This is the strongest rotation towards high beta names we've seen since when? I mean, just look at the last 4 days here. When was the last time we saw anything like this? We'd have to go back to when? June, right? I mean, this is the strongest rotation back to high beta we've had since June. Now, what does this mean? High beta. These are stocks that are more volatile. These are the top 100 highest volatile names, highest beta names in the S&P 500. So if we were to characterize the last 4 days, what would that mean? I use HB as an indication of a what? A short squeeze. Okay. So what are we seeing right now? We're seeing a squeeze of the shorts. It's driving high beta. We're seeing a short squeeze. And yet, we're not seeing the squeeze yet in Bitcoin, right? Are we about to see it? If we see a continuation of this move, I would expect that Bitcoin starts to get dragged up and creates a squeeze opportunity because we're already seeing it in some names. A name that we had been expecting to see was Rocket. Rocket's finally at $20 again. We traded right here and boom. The squeeze play was done for about 2 months, month and a half. But the last 4 days, we're starting to see a squeeze again. Are we going to get a squeeze into the end of the year? I don't know. But for the last 4 days, we're seeing a desire to squeeze the shorts. So all of those areas where the shorts came in early October, right here, you look at Rocket, boom. Right? All this correlates to the fact that rate cut odds were diminishing. And all of a sudden, we're seeing that reverse in the last week. And where are we going? We're going right back into the squeeze. And we're seeing Rocket, for example. SoFi. Where's SoFi going? Well, guess what? The last 4 days, it's been higher. There was some significant call activity this week in SoFi. What's going to happen with bond yields? I don't know. But the reality is, we're seeing right now, we're seeing a little bit of front running. We're seeing a squeeze in high short interest companies that are correlated. Got stopped out of Rocket. Guess what? Our trade in Rocket got not stopped out. We got timed out. It expired on Friday. Then all of a sudden, boom. We had an earnings announcement. Looked like we're finally going to get there push when we saw the slump here as rate cut odds diminished. This fell right back around. And then all of a sudden, rate cut odds are back up again. And boom, we're pushing to 20. And that was the level we needed it to get. Okay. Sometimes you can be right, but not right on time. And the last month and a half, it's been tough for looking for short squeezes. But the last 4 days, we're seeing that start to return again. As the shorts are getting squeezed, as they really began to get ramped up. This is a two-edged sword, though. Recognize that the strength you're seeing is what? The buyers of last resort, who are the shorts. They're the ones that are getting squeezed right now, and they're pushing the market higher. The question is, how long does this last? And does this start to come around to Bitcoin and Bitcoin-related companies? So the idea is, what's the next domino? So again, you're seeing the first dominoes of the short squeeze start to fall. Is Bitcoin the next domino? Well, what area has very high short interest? That's been getting squeezed. That's had significant movement this week. Biotech, right? Biotech has not experienced any pressure. We saw a little bit of selling here, back off to the races. Many of these companies have high short interest. They're garbage companies. There's very little companies in the biotech space that are actually good fundamental companies. It's all about what? How much access to capital can we just light a fire and burn, right? That's biotech. And we saw rotation in here. And again, the idea is we're seeing the last few days, we're edging higher, but this trade may actually be setting up because once we see the next dominoes to fall, oops, let's go back to my slides here. Once we start to see the next dominoes to fall is XBI on the bearish side. Because what happens is that we start to rotate and we go to the next domino bullishly, we start to sell what we were previously long. And this sets up for XBI. Are we going to get a Mag 7 rally? So this is the direction we're going to kind of take our discussion today. But before we get there, let me just share with you, we're almost to the end of our Black Friday giveaway. I've got $52,000 Brandon Chapman CMT of Theo credits. It's $1,000 each. You get to turn $1 into $2 and apply your 2,000 credits into my mastermind or trade alert service. First to come, first served. Limit 2 credits available per person. Go lifetime if you want. Again, Professor shared it. Get a Falcon out. You could potentially win a Falcon F10 laptop. 623-244-5657. Code word Brandon. Okay. Now some of those code words that bring in the cavalry, right? All right. So let's take a look at what's going on. Let's take a look at volatility and we'll circle back to the console. So what I'm watching right now, how much has volatility expectations shifted since the low in the S&P 500? So I'm going to bring up the VIX3 index ratio. Now, what is this? This is the 3-month VIX to 1-month VIX. We're seeing volatility getting smashed here, but how much is that raising volatility expectations? Just realize that the VIX doesn't really measure volatility expectations. It's really just delving into the here and now. And we're saying right now, volatility is dropping, right? Because the market's rallying. But volatility expectations is really shaped in what's called term structure. So if I look at 3-month vol and I divide it by 1-month vol, which is the VIX, this is the 3-month, that's the 1-month, and I get a ratio. That ratio is at 1.15 right now. This tells you that the 3-month vol is 15% higher than the 1-month. Vol expectations are ramping up quickly. We might be another day away from getting above 1.2, and at 20%, as we shift towards 20%, the 3-month being 20% higher than the 1-month, this equals 1.20, which you'll see over here. That's where the line is. When we get there, that's telling you, hey, vol expectations are extreme. And so just realize that as we're seeing the movement in the market, we're really ramping up. And if we get up here, that's a significant sign. That's where we were on October 27th, by the way. Okay. And so we had a chance to, we talked about putting on a hedge back here. You had a chance to roll it twice. You still have the hedge. It's moving out of the money, but it may come back around again. You may, even if you want to roll those puts up, you can, because you've already collected $2,000 on the way down. You have $2,000 to roll those puts up. And where are those puts right now? Let's go to the risk profile. And we'll look at SPY. Where is it? Those puts are what? At 650. So we rolled it from 671 to 658, then 658 to 650 virtually here, right? And at 650, you're down right here. It's not a bad place to be at the moment, but if you want to roll it up and spend a little money to do it, you collected about $2,000 on the way down to be able to roll on the way up. Okay. And so the idea as of right now is just saying, look, we're ramping up the correction indications, right? And we look at skew. Skew popped up to 151 yesterday from down here at 148. Rising skew tells you what? Institutions are hedging, right? They're certainly covering those shorts. They're driving the market right now, but they are hedging it, right? They are hedging their longs at a significant level. And then you have the VIX3 index ratio really ramping up, which we're at 1.15 right now. 1.2, And this north of 130 tells us what? We're now set up for a 5 to 10% correction. So if you think that we're really shaping up for a big end of year rally, realize we're actually not. We're seeing the squeeze this week. This is a holiday shortened week where again, you're just forcing the shorts to get squeezed. We're seeing high beta names getting popped here. And what does that mean? We're just ramping up for another 5 to 10% correction, which we got the 5% correction, right? We're just setting up for another one. And so again, just realize that what you're seeing this week is really somewhat of a mirage because there's just a lack of trading that's going on. Dead cat bounce, month end. Yeah, all that stuff is kind of playing out here. But the move in high beta, while positive, it's reflective of a short squeeze, right? Now, if you're playing the long story here, what's the next area that we're going to experience a short squeeze? Well, let's take a look at the console, okay? And we're going to try to see and identify potential opportunities here, right? So I got Mara up here. So Mara, this is for today. We'll look at what happened yesterday, but today, this is a December 5th, 1250 strike, 10,000 contracts. Now we're working on developing out the location here. This will show you the time and sales, but we need to beef up the actual info. We have the time and sales for it. We got to beef up the ability to sort and search or scan the location. So if we want to delve into this, we can. We're almost there on location. And so this is something we're building out. Squeeze bar is another one. Mara, it's got 4 bars. Why? Okay. Why does this have 4 bars? Just look right here. Mara has 33% short interest and a short ratio of 2.19 days. Now that's not super high, but if you got over 20% of your float shorted, it's going to have 4 bars. And so this really helps you just narrow down the field and say, what's the next short squeeze to occur? Can it be Mara? This has a squeeze bar of 4. The answer is it very well can be. And now if we dig deeper on Mara here, and I'll just show you, this is a roll. And what is the roll in Mara? You'll just see that they're moving it from the December 1150. They're moving it up to the 1250. Now, this does remove risk, right? This option is going for 35 cents. This option is going for 13 cents. They're taking risk out, and it does raise our gamma level here. We're moving that gamma level from 1150 to 1250. That's not actually that great. We want to have a closer gamma level. I'd love to have an 1150. If we push to and through 1150, they could pop it. But the reality is this stock is so volatile, a gamma level at 250. So if we can run to 1250 and through 1250, this is where we can experience that squeeze. Are you willing to take that kind of bet? Okay, so we're seeing Mara take console. Oh man, this could really move big. We just got to get to and through 1250, and this could really pop it. Now, for this, that is for what? A December 5th expiration. Right now, the delta is 18. Well, guess what? If the price moves up to 1250, the delta is going to be 0.5. The market maker's on the hook here. 15,000 contracts. They're on the hook at 1250. The price moves to 1250. That delta goes from 18 to 50. They've got to hedge it. What do they have to do to hedge it? How do they hedge it? They buy Mara stock. This is what's called the gamma squeeze. The level to attain is 1250 at the moment. Now we can look at other expirations and see, is there anything else we could derive from? You'll see $11 here. You'll see what, $12. These may be getting closed out. This may be getting closed out for this week. We may be closing the door on November 28th, but we're building it out for December 5th, right? Go to the 12th. What do we have here? Nothing. Go to the 19th. What do we have here? $12. So as we start to get towards $12, $12.50, this is where you start to create this potential squeeze in the price to and through that could drive it. Okay. That could really drive Mara. Now, when you have a high short interest stock like Mara, guess what? The volatility is generally speaking pretty amenable to trading that squeeze using calls and in particular call verticals. Now, right now, we've kind of been in a bearish environment where we're seeing declines. And what happens to create the squeeze potential, and you're going to typically see call volatility higher than put volatility. That's not exactly happening right now, at least not for December. Okay. The bearishness in the market has kind of driven out the need to hedge. And so the question is, where are hedges being added and where can we see the squeeze? We do see it out here in January. So if you're going to do this, you're probably going to trade a January expiration. The call volatility is not exactly higher than the put vol in Mara, which normally it is, but we do see volatility rising. This creates an opportunity to structure a long call vertical trade. You could buy an 11 and sell a 13. This is at the money and out of the money. It's going to cost you 71 cents, right? For a $2 wide spread, $13 is right there. You move to about 13 to 14, you will be out of that spread. How much are we looking for in that? You're paying 71 cents at the moment, 0.71 times 1.7. You're looking to get out for about $1.20. So the point being is that you don't need much, and you've got how many days now? 51 days to see the price to move somewhere in this $13 range, and you're out at $1.20. You make 70%. What do you folks think about this? Again, you could get there tomorrow. Well, not tomorrow, it's Thanksgiving. You could get there Friday, get there next Monday or Tuesday, right? The closer you are to expiration, the less it has to move. But the reality is, again, 71 cents. If I'm looking for $1.20, we're buying the 11. If I get to 12.20, that spread might be worth $1 or maybe slightly less because of skew. If I push a bit higher towards 13, guess what? That spread might be worth closer to what? Maybe $1.50. So somewhere between 12.20 and 13, you're out of this trade. Like it, don't like it. What do you think? Thoughts on this? I'm interested. What do you guys think? Is that an intriguing play? All we're doing is looking for any sort of move, right? Any sort of move in this product, you are gone. You are done. You're out. You made your money. You move on. Now, let's look at another one here. I'm going to go back to yesterday, right? So in this case, we look at 11.25. And you'll see there's some mixed trade here in Mara. They're still mostly on the call side here. And buying calls, there's some puts being bought, but not a lot. This is really just kind of a churning type trade here because the vol alert and the vol day is very disparate. Okay. Generally buying calls yesterday, but in Riot, very similar business as Mara. Look right here. They bought around 19,000 contracts in one trade. One trade buying 19. Who buys 19,000 contracts in one trade, scaling up to 50,000? It was only a handful of trades here that got us from 19 to 50,000 contracts on the $16 Riot calls. This has 3 squeeze bars. There's not as much short interest in Riot, but it's pretty high still. So we look at Riot here. We look at share short, 13% short ratio of 2 days. If that had a short ratio of 5, you'd be at 4 squeeze bars, right? Since we're less than 20 and we're not at 5, we're at 3. 3 and 4 squeeze bars are significant in terms of indicative of major squeezes in the price. And so what we're seeing here yesterday, Riot buying the 16 call options in big blocks. Okay, we've pushed up for the last couple of days in Riot, right? Mara is oftentimes a laggard in this space. Jan 16. Okay, so if we want to go back and get a retrospective, Jan 16, do we see 50,000 contracts there? Yes, we do. This wasn't like we're just seeing a bunch of retail trade. These were massive prints coming in, and you see the open interest being built there at 16. For Riot, we have what's called a gamma level, right? $16. If we can get 216 and start to break through here, guess what happens? If they're buying 50,000 contracts, the market maker's taking the other side of it. What happens when we break 16? They're going to have to cover, right? They're going to have to cover their butt by hedging, buying stock. The stock already has 13% short interest. You squeeze the shorts, this is what creates these furious moves. If we can get 2 and through 16, this might go to 22 in very short order. So the point is, we don't need, is this head and shoulders? It's going to take a lot, right? So you might look and say, okay, maybe a shoulder, maybe a head, maybe a shoulder. But if we get to 20, does it matter? No, right? So the point is, we're looking at this being oversold. We're looking for what's the next domino to fall in this high beta trade, this high beta squeeze. You've already gotten it in areas that are really interest rate sensitive. We're seeing a rocket, seeing a little bit in SoFi. Do we get it here in Bitcoin? The options market is structuring itself. And remember that when you see this, this is not pie in the sky. And I'm excited for, who's excited for pie coming up tomorrow? I mean, come on. I mean, what, feel free to share in the chat. What is your favorite pie for Thanksgiving? I love a good cherry with some ice cream. My wife's going to make some cheesecake. I love cheesecake, big time cheesecake with cherry on top. If it ain't, cherries for Thanksgiving is a big one for me. Pecan, not bad. Little butter pecan ice cream, cherry pie with whipped cream. I'm going to go with ice cream on it, but I'm with you. Cherry pie, definitely. Good cherry pie. Not too sugary. I love it, man. Berry pies too. Berry pies. Oh man, love good berry pie. My mother-in-law makes a lemon pie. I totally missed the lemon pie here. She got it from someone that got the recipe, and someone won an award for it. It's amazing. I love lemon pie. Okay. Growing up, my dad would go to the Hostess, discount outlet, bring home the Hostess pies. He'd get me lemon. He'd put it in the freezer. Frozen lemon Hostess pies. French silk, get a little chocolate in there. Do the sampler. The sampler of the pie. Love it. Get a nice little slice. 4 or 5 different pies. We don't have a Marie calendars around here, but we're in California for Thanksgiving. Go get a couple of cream pies from Marie calendars. That's a nice one. Okay. Anyway, so I'm super excited about pie. But Riot, again, notice that for Jan, the vol structure is very, very favorable. Low and volatility is rising. You can buy down here and sell out there. And it's a really cheap spread, and you have an edge, just like in Mara. The squeeze potential isn't as great, but Riot has a little bit better business and still has reasonably high 3 bars on the squeeze bar. So if I come right here, let's go 16, not buy at the money, but you can buy a 16, sell an 18 for 50 cents. All right, let's move it at the money. Because the skew is elevated, the cost is low, you might say, okay, it's going to allow me to get a 53 delta. Now, the 53 is a little bit misleading because we do have some positive skew in here. Notice we have, even out here, this is like a volatility smile, right? You really don't have any skew in this, but volatility is rising, which is beneficial. It's allowing you to get cozy up to the stock price at 15 for a 62-cent debit. Okay. I mean, again, when we're talking about, we have an incidence, we have oversold conditions. We have oversold conditions. We have a scenario where we're seeing a volume build in the option market. And on top of that, we have skew that's in our favor to get a cheap spread. You put all these things together over time, that should work. That should work. And so the idea being is I don't need it to get to 17. Take 62 cents and times it by 1.7. 0.62 times 1.7. Where are we at? $1.05 gets you home, right? Where do we need to get? We just get maybe a little above $16. We're there. We're done. $16 is not so far away. $16 is right there. And by the way, it's exactly where your gamma level is, right? 50,000 contracts. We know they bought most of it there. And it all virtually all carried over to today in terms of open interest. We know the market makers hooked there, right? They're on the hook. They're going to have to hedge if we move to and through 16. We have 51 days though. So it does limit some of the gamma potentials. We're going from 45 to 50 to 60. The delta is not going to move a lot, but it does create a squeeze condition if we can go to and through 16. This is not guesswork, right? This isn't like we're looking at a chart and we're saying, okay, yeah, we're getting a bounce here. So, I mean, I would draw some fib retracements. I like fibs and say, okay, what could I reasonably expect here? Okay, if we get to the 1/3 retracement, near-term target 1641. The chart doesn't drive the price, right? The chart is just trying to add consistency as far as your entry. So if I'm expecting some leadership, maybe a move, an oversold bounce, okay, 1641. Maybe if things go really well to 19. But this does not drive the price. But that trade there at 16 does actually drive the price. So people ask, well, does this work? Well, you don't understand. It is not whether it works or not, right? It's just a matter, can we break 16? That at this stage, that's the only question. Can we break 16 or not? If we can't, then no, it's going to wither on the vine. It's not going to drive the price. It might drive it a little bit here yesterday, but we got to get to and through 16. We break 16. We have a driver. We have 50,000 contracts that we know were mostly bought yesterday. So the point of this, and this is the great thing about identifying these massive prints, is that look, we know the market makers on, they know there's going to be a gamma squeeze if we can break that level. That's when I say to and through. It's exactly what I mean. To and through. This represents structural buying and selling interest. And this is mostly applicable to individual stocks and not to ETFs. ETFs are more about flows. They can't really trade away from their NAV a lot. But the reality is, though, if I go to Baito, right, is Baito reflecting the performance in those two companies? Absolutely. So I really haven't seen anything in Baito the last couple of days, but the point is we're seeing components of Baito. You could decide to trade Baito. There's not exactly a gamma level in this, but the reality is the performance in Mara and Riot and the like will transfer to something like Baito to a degree. But I typically trade Mara just because of its massive short interest. All this has to do is catch up, which it frequently is late to the party and then it plays catch up. It's late to the party and then plays catch up. Late to the party and then plays catch up. Okay, so it's late to the party right now, but we have to the trade in the last couple of days here that now we know where's the level. We now know it's where. Now I forgot where the we're moving it out to the $12 strike price. What expiration was December 5th, right? We're moving out here to 12.50. There's some interest at 12. If we can get to that level and we start to break through, this could really drive a big time short squeeze. And the great thing about these kind of companies, they actually move big, way more than the market would ever predict, right? Volatility is typically cheap, and if skews in your favor, that's even better. Okay. And so again, these are things that are setting up in Bitcoin. Do we know it's going to move? My son started to play drums. Sorry if you can hear that. Do we know it's going to move? No, we don't know if it's going to break that level, but we do know if we can, it's going to create momentum. And if that momentum, the gamma squeeze could pressure the shorts to cover. Now we get the big move. Okay. So as we go back here and we think about, okay, lead and lag. What about Mag 7? When I usually refer to Mag 7, I will typically talk about dog to vomit. Okay. Mag 7 companies are way, way overvalued, right? So as a function, Mag 7, we're in this position where, are they likely to lead? We're really coming down here to NVIDIA. Is NVIDIA going to help lead it? Probably not. Right? NVIDIA will likely underperform. Is there a chance for Goog to lead? Maybe. Apple. Probably not. Apple is in a great position. No. Google. Tesla. I do like Tesla here. Why? Because if I look at Tesla's been an underperformer. Oops, wrong one. Tesla's been a bit of an underperformer. Oh, shoot. Tesla's been a bit of an underperformer, but we saw calls being bought last Friday. Sorry, folks. Let me quickly pop. All right. So I had to tell my son to stop playing drums. Anyway, so I don't know if you guys heard or not. So I was like, just in case you guys are hearing it. So the point is Tesla, again, am I expecting Tesla to be a leader Max 7? I am a little bit, right? Is this an AI play? To some degree. Yeah, more cowbell. He does have a cowbell. I got it for him 2 years ago. I hooked it to his electronic drum set. But then he went full Monty, decided, okay, I'm going with the real thing. But anyway, probably kids home, right? You don't expect that. Anyway, am I expecting Tesla to probably lead out here? Yeah. Could you look at Max 7? Max. I mean, if nothing else, if the market goes higher, Max 7 should lead. But here's the problem though. I'm expecting the volatility expectations are ramping, right? We can see right here as the VIX is falling that volatility expectations are kind of spiking right now. The VIX is getting crushed. And as a result, we're seeing vol expectations ramp right back up to that extreme level. We're just resetting the exact same conditions we saw on October 27th. Now, we were able to push away from that in July and August. Why? Especially starting on August 27th. Why? Because Powell was going to cut rates, right? He was going to go right back into cutting rates again, and it helped crush the dollar and help keep the market up. Then all of a sudden we start to diminish those rate cut expectations, steps in the October meeting, and all of a sudden what happens? Market sells off, vol expectations diminish as the market corrects, and we set ourselves up for the rally we're seeing right now. But we're only just resetting, and into this again, as we saw, institutions are hedging. They're buying calls and selling puts. That's why skew is rising here. And we're at a pretty extreme level. I would expect if we see an end of year rally here, this may ramp up to really, really high levels. 2026, going into that turn from 25, the turn to 26 could be fraught with a ton of risk because this is a really uncertain time. And we've just been able to paper over it for the last few years, really since 2020. I don't think we've really recovered economically since 2020. Haven't. We've just taken on a crap load of debt, right? And debt creates inflation. We felt the effects of it, right? Prices are going up. Why? Because the dollar is getting smashed. And it did this year because of tariffs. Tariffs smashed the dollar. Why? Because we're trying to bring manufacturing home, which means that half of all of our dollars are held abroad. And if all of a sudden we're not really wanting to be the reserve currency anymore, and we're making this transition to where we're not borrowing from the world to an extensive degree every year, the reserve currency is going to diminish, right? So now we're seeing some of those dollars come home to roost and it's being invested in gold. Anyway. Yeah. Yeah. I mean, FANGs, the problem with FANGs is that is FANGs a thing anymore? Right? FNGD, right? So, is FANGs even a thing anymore? Do you really want Netflix in that picture? Probably not. Right? But MAGS does represent, right? MAGS does represent more fully, right? The MAG 7. That's designed to be around that. So again, the idea is that, this helps you kind of just get a sense. So again, MAG 7, could it be a play? If you think that we're going to rally in the end of the year, it's going to be because MAG 7 is going higher. So we're going back. What's going to lead and lag? Well, MAG 7, it's a bit more dicey. This might be that overbought, oversold condition. You're looking for a small rally on dollar weakness. Gold expectation, we're going to lead the S&P 500. If the S&P holds up and we kind of limp along in the end of the year, MAG 7 may lead, but NVIDIA. XBI though. Actually, let me show you FBTC. This is one that's popping up today. So not just Mara, but this is more directly related to what. Let's go back here to today, and we'll just bring up the block trades. Makes it easy, right? Just hit the easy button. There's 30-day. We're seeing a more active trade today. Okay. Let's flip this for vol. So we got TLT. We got some bearish positions being put on in TLT. I'm bearish in XLU, so this helps if we see a bit of a pullback here. There's Mara. Where's the FBTC? Sometimes I forget. I can't see it in here. Was that yesterday? Sorry, that might have been yesterday. Oh, no, it was yesterday. Sorry. So this is Bitcoin. So what are they doing in FBTC? This is a Bitcoin ETF. They bought the 79 calls. How do I know that? Because this right here, and 3,600, this is not a hugely active product. So if we want to take a look just really fast at this FBTC, this is the Fidelity Wise Origin Bitcoin Fund. And if we look down here, statistics, this is not an actively traded product, right? So the point is, I mean, institutions use options to hide their positions. Michael Burry is a great example. They use it to hide their positions. They also do what? Tom Lee talked about, if you have $1 billion plus in Bitcoin, how do you hedge? You have to use MSTR options. There's no other way to do it. So again, FBTC, is this a short hedge or is this just a trade? I would say this is a trade in Bitcoin, but they traded 3,600 contracts. They bought the 79 because this was traded at the ask. They sold the 84. This is a spread trade. It happened at the exact same time yesterday before the close. This was sold at the mid price. Okay. So again, they got filled 3,600 contracts. And let's see, where do we see that open interest? We go to December 5th. If you want to look today, you could probably see it in here somewhere. It's right there. And right there. They bought the 79 and sold the 84. Now, does this create gamma? Not really. It's an ETF. It's Bitcoin. But the reality is that it does create gamma if you have enough because it spills over. Do you hedge with FBTC shares? Do you hedge with Bitcoin, right? Do you again, how do you hedge this? This does help create lift the more that we see in here. So again, but it's going to be not as direct as what you'd find otherwise. But again, this is a pretty good sentiment. They're buying 46 vol and selling 52. That is a really cheap spread. These options out here are really expensive. But the liquidity is not as good. All right, it doesn't matter, but this is indicative of what? It's indicative of a potential rally. 86 is right here. So if I draw my fib retracement from high to low, is 86 atypical? No, I mean 86 would be, if we get a rally off the lows, you get a 38% retracement. That's your 1/3 retracement. So this notion that the target of this is 84, in fact, that's less than a 1/3 retracement. So the idea of FBTC target 84 in the next 9 days, would this be completely out of the realm? No. For me, though, I wouldn't trade this. I would just trade what? IBIT. Just trade IBIT. There's way more depth in here. Give yourself a little more time, maybe 3 weeks, right? What's our 30% retracement in IBIT? 30% retracement in IBIT, it's about 56. All right, so what can we get out here, right? Upwards of 56, 23 days out. Is the vol structure as favorable as the other? No, it's not, but it's pretty flat out here as you get towards the 40 delta. Buy a 52, sell a 54. Right now, my trade in IBIT's a 51.53. So we're up about 14% in it. Okay. But it's 52.54. Okay. 61 cents. You don't even need it to get to 54 in the next 23 days. You get it here about 53. You're 53 and a half. You're probably done. Just take that number times it by 1.7. Now you know where to get out. Okay, so these are plays in Bitcoin, right, that we're looking at here today. So if you're wanting to take a swing, there's a lot of ways to do it. Again, you could buy a spread in Mara. You could buy a spread in Riot. You could buy a spread in IBIT. Okay, playing that kind of just activity we've seen this week bullishly in those products. Now, if you're wanting to buy a long option, let's go back to Mara. So if you're wanting to buy a call, for example, Mara is a pretty good product to do it. Well, how do I know that? Because if I look at volatility right now is in the 49th percentile. It's kind of high. It is. But Why buy a call on Mara? Well, let's go to studies here. I'm going to show Don's expected move study, but I'm going to change it from a 180, a standard deviation to a 3. So I'm going to change this to 3 here. Now, a 3 standard deviation move should contain the price 99.7% of the time. Okay, so we want to see, does Mara move enough so that the calls might be considered cheap? How often does it make a 3 standard deviation move, right? Because if we make it this week, that'd be 14. Well, that spread on Mara, 11.30. If we get a move to 14, you're done, right? You're out, right? You're out at 70%. So the idea is, how often does it make those kinds of moves? Well, we haven't we came close. We came close here to some degree to the downside, but here we came close to touching it on the upside. We came close to touching it on the upside there. We came close to touching it on the upside there. There's 3 times just in the last month we got close to a 3 standard deviation move and recognize we don't even need it to get to a 3 standard deviation this week for us to be there. And we're just really close to Friday's close right now. We go back here. We came very close to the next day. So we came close to touching there, but kind of faded back. So we never really got there in July. Next day, we kind of pushed upward again. Came close in March back here to the 3, but didn't quite get there. This is not as extreme as other stocks out there, right? But you'll see we're making relatively frequent moves, and the frequency recently, we've kind of gotten there. We've come really close to 3 standard deviation moves, but not quite. We could go back and look at it longer and say, well, okay, well, is there any evidence like last year that we kind of hit? Yeah, we hit once there. We hit it there, for example. We hit it to the downside there, came close to the downside there, hit on the upside there. So if we look back over time, the reality is Mara does make 3 standard deviation moves way more frequently than is statistically factored in by looking at volatility. Even though it's 100%, it's still low. So is there an opportunity to buy a call in Mara? I don't like buying, yes, because again, the call options are cheap. Okay. Because the stock does make 3 standard deviation moves way more than is that the volatility is pricing in, even though we're at about 49 vol rank. So what could you do here? Well, you go out 51 days. Let's just take a 30 delta at 14. Now, this is going to cost you, close to 55, 56 cents. If you're risking $55 in case what? In case Mara can go through 14. Could you go lower, like a 40 delta? You could. 13. It's going to cost you about 75 cents. Is there a long call opportunity in Mara? The answer is yes. And guess what? If in the next 50 days we can break through 13 or break through 14, so let's say you buy the 13, we go to 14, sell the 13, buy the 15. Just stay ahead of the game. Right now, the 13 strike is $2 out of the money. So if we go from 11 to 13, sell your 13 and buy the 15. You're probably risk out at that point or close to it. So right now, if I owned an 11 previously and I roll it to the 13 again, I'm going to sell a vertical just to show you the roll. If we had previously bought an 11 strike, you get about 70 cents right now. So if the price quickly goes to 13, I'm paying about 75 for it. Guess what happens? You can move it from 13 to 15 and probably get around 70 cents. Is that a bad deal? Absolutely not. You're risk out. So if we can just get a singular move from 11 to 13, you're basically risk out if you buy the 13 today. That's how you manage your risk. All we're looking is for at some point, if we can just get to 13, we could roll it. Is that likely? It's absolutely likely. In fact, the delta on the 13 is around 37. Okay. Double that delta. You got over a 70% probability of touching 13. And that's based on volatility that's underrepresenting the movement we're seeing. And if you look at how many times we hit the upper or move towards the upper expected move versus the lower, you understand that Mara, unlike the S&P 500, the crash risk is to the upside. This is what I talk about during many of my master classes. We have one coming up on 12/19. It's a Friday. for 2 hours. We're going to talk about this gamma levels to and through, upside crash risk, why the calls are cheap. So if you want to understand that, join me. Okay. But again, A13 calls, not a bad deal. You got a very good chance of it touching. It's a different way of trading it that if you want a long option, you're there. Okay. So these are all ways to trade Bitcoin to the upside, just playing the oversold bounce. And all we need is a little bounce. You get the roll, you can play the upside. But what about XBI? Earlier in the week, and I shared this, there was a 25,000 put option contracts bought on XBI. It's a significant hedge. And so when you think about this, and let me look at what a strike was. Let me go back to my XBI. Where are you? Control it. Command F here. XBI. I got to pass the ball to Blake here in a second. So on Monday, 20 March. So on Monday, let's just come out, show you where the open interest is out here. 20 March, it was the 100 puts. Okay. Boom, right there. 59,000. So that was all, it was virtually all built on Monday. Is that a hedge? Yes. Is it a 12 delta? Yes. 100 is down here. It's a ways away. Yes. Okay. We're seeing other trades trickle in the biotech space, for example. If we go to today, for example, we've got OSCR. These aren't exactly leaders. They're buying the 14 puts. We have Goss. I forget now. Yeah. What is it? Let me just exit this. Block trade filter on here. What is it? It's sometimes they didn't do a sector assignment for this, but it's it might have been yesterday. Sorry. It was yesterday. Goss. Yesterday, we were buying $2 puts on Goss yesterday. We're seeing this trade kind of build here. And again, when we're talking about this, we're saying, look, where are we seeing rotation? We've got rotation here, but eventually we see rotation out of it. If the market weakens and we move away from the squeeze play we've seen for the last 4 days, this is where we start to see maybe the downside resume. But I'm not going to do it this week. Maybe today. But the idea is we're just looking for a little bit of a pullback here, yank back in XBI, not 100, but just a bit of a pullback. You're there. So as we enter towards today, maybe Friday, maybe next Monday, I'm really looking for XBI. I'm expecting we'll probably underperform an XBI heading into the end of the year as maybe other parts of the market start to get lifted and this one fades. Okay. So finally, I'll just share this with you. This is Fermi. I talked about this before. There's been 2 big trades in Fermi this week. This is kind of alternate energy. You got the Rick, what's his face, former governor of Texas. But this is another day, and I'll just show you here, like 61% filled at the ask, 13,000 contracts, way above average. But we're starting to build some gamma potential in here. I don't feel comfortable using this as an alert but 6,000 contracts traded the 1750 strikes. We had previously built at 25. We're starting to see more interest build, more gamma potential in Fermi if we start to see a bit of a move. This is one that, again, could be interesting. Not significant short interest. We could see a move here just because of the gamma. Anyway, Blake, how we doing, man?
Doing good. How are you?
Good. I forgot to share this, but feel free if you want some credits. You want to access the console, etc. Right here. What's your favorite pie on Thanksgiving?
So
Do you have a pie that you make? So Blake
yeah,
is a
so we've
baker.
invented something new.
Oh,
Yeah, so I don't really, I try not to eat sugar anymore. As far as added sugar. So
I
we
fell off
tried to
that
find.
wagon about a month ago. Dang it.
Oh, did you? Yeah, so we're pretty careful as far as what we eat. So I decided I need to find something new. Now to be clear, I hate, despise, find disgusting, and I still try it every single year, one bite. Pumpkin pie. I think pumpkin pie is abomination to all things. Why would you make a dessert out of squash? That's all I'm
Yeah,
saying. Pumpkin pie is disgusting and
I'm not a big
wrong.
pumpkin pie guy. It's okay. The pinch maybe, but I like the fruit pies. So
Yes.
what's your creation? What is the Blake
So
special?
so one of my favorites is a basically a cheesecake blueberry pie. It's
Ooh,
so it's not true cheesecake. It's a cheese kind of a custard filling. But what we invented though is there's a popular thing called the invisible apple cake. Have you heard of that?
Huh.
So invisible apple cake, what it is it's it's done in a way where apples are super thinly sliced and layered in, and then you mix it in with almost a custard, or if you're familiar with German pancakes or that kind
Mhm.
of a filling. And so it just basically coats the apples. And when it cooks, you don't cook it in any crust or anything else like that. And they call it invisible apple pie or apple cake, because it makes a cake, and you can't even see. It's just this
Mm.
weird thing that you can't see where the cake is, and it's just basically 90% apples. So we took that, we modified the sugar content, and then we put it in a pie crust. We do practice turkey, we do practice Thanksgiving always before anything we're doing new. We got to do a practice run. So we did that, and it was phenomenal. If you like apples and cinnamon, nutmeg, those kind of things,
Mhm.
it's very relatively healthy. So
Ah, there we go.
yeah. So that's the one. How about you?
I'm a cherry guy. I like cherry.
Yeah.
Cherry on top of cheesecake, cherry pie.
Hmm.
Um, I do like a berry pie too. So I do like the fruit pies, but desserts, sometimes like you get like that a pumpkin cake with the what's it called? The roll, pumpkin
Yeah.
roll.
Yeah.
Cheese guy, I like those. But yeah, so I'm relatively simple, but I do like the sampler, coconut, get a coconut cream
Banana
pie,
cream, coconut
banana
cream.
cream.
Yeah. There you
If you
go.
get like the little slice sampler, 4 or 5 different pies, I'm all about that.
There you know. Use stevia instead of sugar. Yeah. So you can't do that on something that's hard to do that on a gelatinous one, John. But you can do it on the one that I've done, because it's 90% apples. So
That's an
yes,
attractive word. We talk about dessert, gelatinous.
gelatinous. Hey, I'm just calling it the way I see it.
It jiggles. All right, I'll let you take over here. Happy Thanksgiving, everyone.
Hey,
Hope you have a chance to be with
thanks, man.
family. We
Have a
got
good
family in our house
Thanksgiving.
right now. It's gonna be a fun time. Turkey
Yeah,
bowl in the
good time
morning.
had by all. Nice.